ever wondered what the difference is between a FICO score and a credit score? And wondered, why do I care? Well then, you are in the right place. Today's video is the second video in a 3-part series about your credit score and credit report, and I am spilling the tea. Except not really, because y'all know how I feel about tea. Hi, I'm Michelle. Welcome to my channel. I teach everyday women with everyday money issues how to manage their paycheck so that they can meet their financial and money goals. And if you ever feel like you have money but don't have any money, then this might be the perfect place for you. By the way, hang out with me until the end of the video because I'm going to tell you about a special bonus I have going on right now that I'm really excited about, and I hope you love too. The question of the video: when do you think about checking your credit score? Once a year? Only when you see an ad? I'm super curious about your answers because of some of the new stuff I'm building behind the scenes, so stay tuned with that. But for now, let's get into it, shall we? Let's get this first thing out of the way. So what is a FICO score and a credit score, and what's the difference? Well, most of the time, those two terms are used interchangeably by the average person, and when they are, they essentially mean the same thing. However, technically, there is a difference between the two, which I'm going to get into in just a minute. Because first you might ask, what is a FICO score or a credit score, and why do I care? Well, in terms of your finances, you care because it's like your grade on how well you're doing taking care of your finances. If you're not doing so great a job, then your score might be in the low 500s. But if you're doing an amazing job, then it could be as high as the 850s. If you're doing it really good, then when you need to borrow money for, say, a car, you'll be able to get that loan at a much lower interest rate than you would if your credit was not so good. So, high scores equal a low interest rate. As a matter of fact, if your score is less than 600, you might actually have trouble getting anybody to loan you any money at all. So think of your credit score as your grade. And just like when you were in high school, you want to keep your grade as high as possible. Now, let's talk just a little bit about the difference between a FICO score and other types of credit scores. So a FICO score is a credit score issued by the Fair Isaac Corporation. Get it? FICO. Fair Isaac Co. FICO. And that score is derived using their super secret magical algorithm that really nobody knows how it works. But this is the score that most banks and lending institutions use when evaluating whether or not they're going to loan you money or issue you a credit card, which is essentially loaning you money once you put a purchase on the credit card. And there are other types of credit scores. One's called a VantageScore, which came out 10, maybe 12 years ago, and it's very much like the FICO in that it scores how well you're taking care of your bills, paying your bills, taking care of your finances. And it too has a range between 300 and 500, the higher the better, but the general population knows more about the FICO score. If you would like me to do a video on the VantageScore, then leave me a comment and I'll see what I can do. So, in a nutshell, FICO scores and all the other credit scores are based on your history of paying your bills. And this history is what is on your credit report, and it's usually based on payments related directly to credit. So mortgages, car loans, school loans, credit cards, all that jazz. I did a video and a pretty extensive blog on credit reports, and I'll link them both in the description in case you want to know more. Okay, let's wrap this up so I can tell you about the bonus. So to go back to my question at the very beginning of the video, what is a credit score and why do you care? The key takeaway here is that it's like your grade. And just like in high school, the higher the grade, the better for you. A high credit score, so anything over 700, definitely over 750, will net you the lowest interest rates, or what those in the industry call best terms when you need a loan. And that's why you care. If you have to pay interest, then you want to pay as little interest as possible. Now for my bonus. If you haven't checked it out, my brand new course, Get Better at Money, is live. If you've ever felt like you just weren't doing money right, then you are the person I created this course specially for. With this course, I teach you all of my super simple systems that I use to take care of my money in a thoughtful way without living in a spreadsheet. If you've been struggling to figure out how to pay down debt and get that credit score up, or if you're a struggling saver the way I used to be, then girlfriend, I have the answer and the easy button. If you want to know more, just click the link in the description. It'll never be this cheap again, I promise you. And I hope I see you on the inside. If today's video was helpful, please like and subscribe. It really does help my business. Please feel free to share this video if you think it will help anybody you know. Hit the bell if you'd like to be notified about the third and last video in this series, where I'm answering the age-old question, should you close the credit cards you've paid off? So stay tuned for that. And until next time, have a fantabulous week, and I'll see you soon. Bye.